Hey guys, Czar here. Good morning, 6:07 a.m. New York time. Just watching gold this morning. Not much happening in the equity markets. On the indices here, very range bound, as you can see here. This is the London session, of course, and again we're 3 hours and 7 minutes into the London session, and this was Asia, and you can see it's actually what it looks like. Very narrow range all the way through Asia, and now London. We're up, we're down 30 points on the futures. The E-minis are down 3.5 points, and the Dow's up 33 points. Really not much movement going on. 0.09% on the S&P. So flat, very flat here, guys, on the indices. And so I'm gonna wait until New York open. So that's in another 6, 7, 8, 9, 3.5 hours, 3 hours and 20 minutes or so. But in the meantime, I'm watching gold, and I like to watch gold at around 6 a.m. onwards, where we often see range expansion, like I think is probably going to happen now. Not a prediction. I always just react. I don't spend time predicting anything in the markets. I simply watch what markets are doing, price action, structure, and I anticipate what I will do if the market does something, right? That's very different than predicting. I think the market is going up, or I think the market is going down. The market doesn't care what I think, doesn't care what you think. Hate to break it to you. It's completely irrelevant. So I'm just going to watch the structure now and see what happens and then react. I'm quite comfortable going long or short here. Now, I will tell you that my default bias this morning has everything to do with trend, and I'll take you to the 4-hour chart. And so far, my default bias is up, right? It's bullish because of what I see here. Because on the higher time frame, this is the 4-hour chart, there has already been a break and close above a zone, and that's a bullish thing for me. We've also had a nice textbook top wick on this 4-hour candle. We're now only 10 minutes into this new 4-hour candle with a little bit of a bottom wick. And so if this flips itself, this is where I'd be interested in getting in. And this area here, right there, see that price, 1910 on the side here, 1910. I'll take you back to the 30-minute chart. Where's 1910? 1910 is right here. So it's essentially this candle flipping itself, or exceeding its current wick, if that makes sense. And I'm struggling a little bit here with the English language this morning. It is 6:10. I've been up since 1 a.m., 5 hours and 10 minutes so far been awake. And I know that is a little crazy by most people's standards, but it's something that I've done for years, and I'm trying to change. I'm trying to become more normal. But after many years of trading both the London session and the New York session from beginning to end, it's difficult to shift that sleep schedule over. But I am trying to do it now as I'm a little bit older, into my 4th decade of trading, 35 plus years now, active trading. All right, I'm going to put you on pause for now. I'll bring you back if anything sets up here. But I just wanted to set the stage for what I might be looking at here in the next few minutes, maybe even longer. Put you on pause now. Here we go. All right, guys, we're back, and look what's happened here. A number of minutes have passed, and we'll see if the prices are actually breaking down. I'm going to let this candle close. We might have something here on the downside. I'm going to put you back on pause. Here we go. All right, let's watch this now. 2 minutes and 25 seconds left. What I'm going to do here, guys, is to delete this zone. And the reason I'm deleting this marker is because the next stop, if prices were to drop, would not be this zone, right? Although it could be, because often resistance does turn support. But you'll see me often, quote, ignoring, unquote, that, right? And because the clean traffic is actually the most recent price action is here, taking us down to about here. So now what I would do is to, at least in my mind, place a zone right there, and I'd be looking for this thing to complete. Now I might only target this body because of the fact that the overall momentum has been very much to the upside. But the reason I would take or consider taking a short here is because of the time of day. And we often see, if you study 6 o'clock, 6:30, 7 a.m., we often see a breakout of a range that was set at around that time. You'll see it here too. when prices broke. See this range here? Broke out, right? Watch over here. Now, I haven't looked at this yet. I'm just going to do this randomly with you. Range here, and then break out, right? Let's go back over here. Range, and then break. This one was a little bit later, but you get the idea. Here, range, and then break out. Day before, range. This one was a little bit messier, but eventually it did break out to the upside. It did pull back, and then exploded, of course, on news that day. So I would actually stay out that day anyway because it was a news day. Range here, right? Range, and then break out. So you can take that and use it as like a model if you like, and you can actually do extremely well just by thinking in those terms. And so now what are we doing? We have a little range. It's a very tight range, and then breaking down. 31 seconds left. Guys, I'd be looking for a short here. Potentially, we'll see how this thing closes. I don't know if it's going to close convincingly into this range, or into the zone. But we'll see. I'm just going over to my own platform now. I better hurry in order to get this in here. I'm looking at the 30-minute time frame. Yes, I am. And then placing a sell stop limit order. Waiting for this now. Watch. I want this to give me an upper wick. Otherwise, I'm less interested. This could drive down without me, and that's fine too. It's actually a fairly big move. Sorry guys, I'm still on my own platform. Just dealing with a little bit of a marker issue here. Trying to get things, yeah, okay, there we go. Thanks for your patience, guys, while I'm dealing with my interactive broker's account, which sometimes gives me a problem or two, but nothing that we can't deal with. Okay, watching now, guys. This is not much of a pullback, but it's something. Be risking 10 pips. Okay, live order now. Live order. I'm not in yet, though. I'm not triggered in. I'll let you know when. You'll be able to see this cross here, and that should coincide with when I'm triggered. Waiting. And in. I'm now in this trade, risking 10 pips. To make 20 pips. So we're going for a 2R here. Risking 10 to make 20, so risking 1R to make 2R. That makes sense? Hope it does. And now we wait. Patience. We've tossed the coin, we've called heads, and now it's up to the coin. We're now up to random chance, basically, right? Long-term edge. Watching. guys, driving down. This is just an example of that range expansion I was talking about. We're seeing it play out here just a little bit. This thing could snap back very easily and take us out, but that's okay. Looking for 20 pips here on gold this morning. All right, getting a little sluggish here, guys, this morning. "6:36 a.m. New York time." This is often when we see that expansion, as I mentioned. So let me take you back to that screen I mentioned earlier, this 4-hour, where we had driven up and then we're pulling back. Well, we're taking advantage of the pullback, and that just could be a bottom wick, that it's creating a nice big bottom wick and then driving up further. That's okay with me. But if that bottom wick is right on cue with this range expansion that we're talking about, which we often see at this time of the day, I'm willing to take advantage of that, absolutely. And you'll see it driving down here. This is the VWAP 1 minute on the right-hand side. So 4-hour on the left, 1 minute on the right. The 1 minute on the right, I don't really care about the 1 minute aspect of it. This is the VWAP positioning of it. And so we're looking to bring it down into approximately VWAP. That's another confluence piece, by the way, that I probably should have mentioned. So you'll see here that our target, or my target here, is 1904. See that 1904? And we're driving down to it now. Whoops. Not sure what just happened there. 1904. 1904 down here. I'll take you back to the other screen. Where's VWAP? 1904, right? So we're taking this trade back into 1904. We're also playing this continued retracement to make a bottom wick to maybe go higher. Don't need it to, it's fine if it doesn't. And then also this clean traffic to the left here on the trading screen. So a number of things in favor of this trade. It's that time of day range expansion, break and close below this support. It's the pullback on the 4-hour chart, and it's the heading back to VWAP on the 1 minute chart. Of course, VWAP applies to all time frames, so I didn't need to say 1 minute, but it was just to identify that I was referring to this picture that we see here on the 1 minute. Patiently, guys, patiently waiting. Stop is at 10 points, 10 pips, pardon me. I'm bringing it down to 5 pips now. So just cut the potential risk in half, right? So now it's 0.5 R risk on this trade. We're risking just 0.5 to make 2 full R. Pushing down, being very patient here. Being very patient. VWAP, see that there on the right hand side? Looking for that to drop back. Just a tap, that's all we need. Amateur trader would take profits now because they can't take this weight anymore. I'm not going to be doing that. I'm actually willing to take a 0.5 R loss rather than take profit here. And that might be a little different way of thinking for you, but I can assure you that over time, the road to profitability is to think in this way. Not because it's my way, but it's because this is how the math works. The other way, the math doesn't work, and it's largely why 95, potentially close to 100% of day traders fail to make money in the long run. As a matter of fact, lose money in the long run over a 1 to 2 year period, most within a few months, and a lot within a few weeks. When you've been around as long as I have in the world of trading, you just know that these statistics are not pie in the sky. They're not smoke and mirrors. They're real. The vast majority fail. I have nothing to sell you, so I can give you the truth. This is a very, very difficult game. Another set of amateur traders would now take profit even higher, so they could have taken it down here. If they didn't, they will now take it because they're seeing the buying come in. And the idea of giving this back or taking a loss now is just too painful. So they will jump at the opportunity to take it. This is the mental game, guys. This is about impulse control. This is the real game of trading. The real game of trading is the game you play inside your mind. The subconscious mind has a very, very powerful set of drives and impulses to protect your self-esteem and your self-worth and your identity, because it believes that if you take a loss, then you are a loser. That you are a loser in life, you are a loser in relationships, you are a loser at everything else that you do. None of it's true, of course. But a loss in trading does not make you a loser. As a matter of fact, necessary losses are routine expenses in an ongoing business practice, and they are essential. If you're not taking losses, you're not trading. If you're not trading, there's no chance of you creating significant wealth. No chance in trading. You can make money otherwise in other places, in a regular corporate job. Nothing wrong with that. It's a high calling. We're talking about the trader's mind here. Watching closely now. Being faithful to the model. I will tell you that I am tempted right now to take this profit because I see that it's slowing down. I see that the momentum is waning. I see that there's some fresh buying coming in every now and then, and I want to protect this profit that I have, and it's pretty significant. But another part of me knows that I've created a closed operating system. In other words, I don't mean a bot. I don't mean an automated trading system. I don't mean an EA. I'm talking about a closed operating system in some basic rules that I've set up for my trading plan, my trading strategy, and my trading approach. And those rules need to be kept. Stop now to break even. I'm willing to give all this back. The reason I waited to bring that down is because of time spent down here. The longer time spends down here, the more appropriate it becomes, in my experience, to close and tighten the stop, because that means that stuff is happening in here that could absolutely drive prices back up again, given that it's hesitating to drive down. So now it's about protecting capital, but not taking my profits off the table yet. There are many traders who would scale out at 10 pips, right, which we've absolutely accomplished here. The 10 pips, I mean, not the scaling out. They'll take half off and then let the other half run. Often it'll bounce back and they'll get taken out, and the other half at their stop or at break even. Or then eventually that other half might hit the target. But they've reduced the amount that they can win as a result of that. And in the long run, that becomes challenging. I'm not going to say the math doesn't work in those cases, because it really depends on how often you do it and so on, how much you're risking and what have you, how you're trailing stops and things like that. But it certainly will challenge the math in the long run. And I would encourage you to think about that and run some scenarios backwards and see if what I'm referring to is true or not. I'm experiencing the same impulses that any trader would right now. It's frustrating that this thing is just not driving down. It's frustrating that I know I have 10, 12, 15 pips here in the bag that I could take off the table, and it's not driving down. I'm feeling that. Even after 35 years of active trading, those impulses don't go away. Those feelings don't go away. Those fears don't go away. Those anxieties don't go away. But you learn how to manage them. You learn how to acknowledge them, to feel them, and then release them and let them go. And that releasing them and letting them go is where the magic happens. Denying those feelings doesn't work. As a matter of fact, it will often backfire, because then you just begin to internalize negative emotions, and they'll find other ways to express themselves, whether it be with the way you deal with your family and relationships, or muscle tension, headaches, other problems in your body. I firmly believe that our emotions can get locked into the body. And there's now quite a bit of science behind that as well. It's not just kind of some kind of ethereal woo-woo stuff, right? I encourage you to check out the work of Dr. John Sarno on this, S-A-R-N-O, Dr. John Sarno, The Divided Mind and Healing Back Pain, and his other works in articles and books, but about embodied emotions, TMS, tension myositis, and tension myoneural syndrome, things of that nature. It's pretty powerful stuff. Watching guys being faithful to the model. We just hit a new low by about half a pip, but we're not there yet. Stop is still at break even. Patiently waiting. Patiently. Very difficult to do. I want to take this off the table now. I just want to boom. And we're done. Thanks for joining me, guys. That was 20 pips. It was a 2-hour win. Gold, range expansion. We talked about all the criteria in here earlier on. We'll see you a bit later, guys, into the New York Open. Have an amazing day. Happy Friday to you. If I don't hear from you or don't see you again later on today, have a great weekend. Take care.